When you hear financial news anchors discussing Brent crude or West Texas Intermediate, it might sound distant. But oil prices shape your daily life in ways you might not even realize. These numbers aren't just for traders or economists. They ripple through the economy and touch nearly every aspect of your routine. The price of oil is a key economic indicator, influencing everything from the cost to fill your car to the price of groceries. When oil prices rise, transportation costs go up, and those increases often get passed along to you. Whether you're buying food, clothes, or even booking a flight. It's a chain reaction that starts at the oil well and ends at your wallet. Oil's journey from extraction to your gas tank is shaped by global politics, OPEC decisions, and even diplomatic whispers. A single meeting between oil-producing nations can send prices soaring or tumbling, and international tensions can disrupt supply lines overnight. The world's dependence on oil means that events thousands of miles away can have a direct impact on your daily expenses. A single event, like a policy shift in Washington or tensions in the Middle East, can ripple through the market and hit your wallet. Even rumors of conflict or new regulations can cause uncertainty, making prices jump before anything actually happens. It's a reminder of how interconnected our world really is. This week, oil prices swung wildly, first up on conflict fears, then down as diplomacy and supply hopes emerged. These rapid changes can make it hard to predict what you'll pay at the pump or in the store, and they keep markets and consumers on edge. By breaking down these events, we'll reveal why oil prices moved and what it means for your budget. Understanding these shifts can help you make smarter choices, whether you're planning a road trip or just trying to stretch your paycheck a little further. Our goal: demystify oil trading and show how global headlines impact your finances. We'll connect the dots between international news, market reactions, and the prices you see every day. This isn't just about numbers, it's about your money, your choices, and your future. By understanding the forces behind oil prices, you'll be better prepared to navigate the ups and downs that affect us all. This week, oil markets were a study in volatility. Brent crude closed slightly higher Friday at $67.75 a barrel, but for the week, it slipped about 0.5%. West Texas Intermediate, or WTI, ended at $62.89, down about 1% for the week. The biggest drop came Thursday, nearly 3% in a single day, triggered by shifting geopolitical winds. Early in the week, traders priced in risk from US-Iran tensions, pushing prices up. But as diplomatic signals and talk of increased supply emerged, those gains evaporated. The market's mood flipped from fear of shortage to concern about oversupply. This week was a textbook case of how headlines and psychology drive oil prices. For now, oversupply worries outweigh fears of conflict. As the week began, fear gripped the oil markets, taking the wheel and steering sentiment. The main source of anxiety? Rising tensions between the United States and Iran. Headlines blared warnings of potential conflict, and traders everywhere braced for the fallout. In times like these, uncertainty becomes the dominant force, overshadowing fundamentals and driving rapid, sometimes irrational, market moves. Any hint of instability in the Middle East, especially when it involves Iran, sends shockwaves through the oil markets. The mere suggestion of U.S. military action, coupled with the deployment of an aircraft carrier to the Persian Gulf, was enough to send oil prices sharply higher. Traders know that the region is a critical artery for global energy supplies, and any threat to its stability can have immediate, far-reaching consequences. The Strait of Hormuz, a narrow but vital shipping lane, became the focal point of concern. Nearly a fifth of the world's oil passes through these waters, so even the possibility of disruption is enough to rattle nerves. The Pentagon's visible response signaled that the U.S. was taking the threat seriously, and that added a hefty risk premium to every barrel traded. But geopolitics wasn't the only factor at play. On the economic front, softer U.S. inflation data hinted that the Federal Reserve might soon lower interest rates. Lower rates can stimulate economic activity, which in turn boosts energy demand, At the same time, a slight drop in the U.S. oil rig count suggested that future supply growth could slow, adding to the bullish mood among traders. The combination of geopolitical risk, economic signals, and supply concerns created a perfect storm. Investors rushed to buy, pushing prices higher as they prepared for the worst-case scenario. The mood on trading floors was tense, with every new headline and data point scrutinized for clues about what might happen next. In such an environment, the market was on a knife's edge, ready to react instantly to any sign of escalation or relief. In oil trading, even the smallest signals can trigger outsized moves, as fear and hope battle for control. This week, fear was a powerful force, shaping every decision and headline. But as we'll see, even the strongest waves of anxiety can recede just as quickly as they arrive. Just as quickly as fear drove prices up, diplomacy and supply prospects sent them tumbling. President Trump's comments about a possible Iran deal shifted the market's focus from war to negotiation. The risk premium evaporated, and oil dropped nearly 3% in a day. Traders now saw the potential for more Iranian oil entering the market. OPEC Plus also hinted at increasing output to meet summer demand, reinforcing the sense of coming oversupply. The market's concern flipped, from shortage to glut. A few words from world leaders and OPEC's signals were enough to reverse the week's earlier rally. In oil, sentiment can turn on a dime. While Iran and OPEC Plus dominated headlines, the U.S. quietly eased sanctions on Venezuela's energy sector, marking a significant shift in global oil politics. This decision, made with little fanfare, could have far-reaching consequences for the world's energy landscape, as Venezuela holds some of the largest proven oil reserves on the planet. By allowing international companies to return and invest, the U.S. move opens the door for Venezuela's oil industry to be revived after years of stagnation. This could potentially add a significant new stream of supply to the global market, as long-dormant oil fields and refineries are brought back online and production ramps up. Already, U.S.-controlled sales of Venezuelan oil have generated over $1 billion in revenue, with billions more expected in the coming months as exports increase. This influx of cash is not only a lifeline for Venezuela's struggling economy, but also a new factor for global oil markets to consider. For a market already worried about oversupply, Venezuela's return adds even more downward pressure on prices. Traders and analysts are watching closely, as the prospect of additional barrels entering the market could further tip the delicate balance between supply and demand. The U.S. aims to moderate global oil prices and diversify supply beyond the Middle East, reducing reliance on traditional producers and increasing stability in the market. By bringing Venezuela back into the fold, Washington is sending a clear message about its strategy for energy security. Restoring Venezuela's output will take time, as infrastructure needs repair and investment. But the psychological impact is immediate. Markets now anticipate more oil is on the way, and that expectation alone is enough to move prices. Combined with the latest developments from OPEC Plus and Iran, the news of Venezuela's return created a perfect storm, fueling this week's sharp price drop and shaking up market forecasts. 3 major supply stories in a single week overwhelmed earlier fears of shortages, leaving traders scrambling to reassess their positions and strategies. Venezuela's comeback is just beginning, but it's already shifting market sentiment and reminding the world that in oil, new players can change the game almost overnight. To understand oil's wild swings, listen to the experts. Dennis Kissler of Bach Financial says a $5.07 per barrel geopolitical premium was built into prices until diplomacy erased it. When war fears faded, that premium vanished, causing Thursday's sharp drop. Data showed investors had bet on rising prices, only to be caught off guard by the sudden shift. Even pros can be surprised by fast-moving headlines. The oil market is a living, breathing reflection of global risk and sentiment. This week it pivoted in real time. Oil prices don't move in isolation. Global events ripple through the market. Russia's announcement of new Ukraine peace talks added to the sense of easing tensions. Progress in Ukraine could stabilize European energy supplies and the broader economy. Even secondary news can tip the balance toward lower prices by reducing global anxiety. Oil is a barometer of world risk. When tensions ease, so do prices. This week, positive diplomatic signals from multiple fronts helped push oil lower. The market rewards stability. So what does all this mean for you? Lower oil prices usually mean cheaper gasoline. As crude prices fall, savings trickle down to the pump. Good news for drivers. It may take a week to see the full effect, but lower oil means more money in your pocket. The impact goes beyond gas. Oil costs affect everything from food to shipping. Cheaper oil lowers costs for farmers, manufacturers, and truckers, helping keep prices stable. When oil is expensive, inflation rises. When it's cheap, it acts as a brake. This week's events could ease your cost of living, from commutes to groceries. Oil prices aren't just news. They're your bottom line. The lesson? The world is deeply interconnected, and oil prices are the link between global events and your wallet. A diplomatic breakthrough or a new supply source can quickly change what you pay at the pump. This week showed how fear of conflict raised prices, but diplomacy and new supply brought them back down. By following these trends, you can anticipate changes in your cost of living. Understanding oil's story helps you make smarter financial decisions. Finance isn't just numbers, it's about understanding the world. Stay informed, and you'll be better prepared for whatever comes next. For more insights on how global finance affects your life, subscribe.